to do with you getting your ego stroked for this trade. It isn't about ego, guys. What I'm trying to show you is the value of developing higher probability scenarios. We painted this last night to show you how a bottom edge could develop. Look at what happened next. Remember, scenarios are not predictions. I'm not predicting that this is going to happen. If I predicted that this was going to happen, my God, I could command a salary of $5 trillion a year from any bank, couldn't I? If that's my prediction and that's exactly what happens next, my salary basic would go through the roof. It's not a prediction, it's a probability scenario, guys. So when you're thinking about the timing of this trade, it's not even it's accurate in terms of the timing as well, because if the market was bullish, what I suggested here was there was going to be a buy from the Brent open. Guess what happened? There was a buy from the Brent open. Guess what happened next? The price traded back into the narrative exactly as expected again. Look at what happened, guys. It's not good. It's unbelievable. But it's not me being brilliant. It's not me saying to you guys, "Oh, look at me, look at me. This is fantastic. I did exactly what I said it was going to do." I didn't say it was going to do this. I said that this was one scenario. This is what's happened since then, guys. We bounced off the level that we already had identified here with this arrow. Why did we have that point on the screens there? Why did we have that little point there? Because it was at 8 o'clock. What happens at 8 o'clock on oil? Brent opens. Why did we have this point in the charts here at 1400 hours? Why did we have that point in the charts at 1400 hours? Because that's when the NYMEX market opens. So we're expecting the market to go bid off Brent. It went bid off of Brent. Where did it go to? The RGL. Surprised? Why would you be surprised if the price goes back to the RGL and then sells back off? It's an RGL, guys. So where's the price going to go back to? Probably, possibly, 37 evens. When is it going to do that? It's going to do that into the NYMEX open. It's going to run the stops, try and get the liquidity for a buy trade if the value was bullish. And then it might go back into the 37s, 38s at the high price here, maybe break higher for 39s. That's what could happen as a probability scenario. And because the distribution here is, because the value line isn't massively bearish. Remember, we've already sold off from 40.5 and 41.5, guys. This has been a massive sell on this macro so far. There's at least, if this bearish line doesn't continue bearish, and it kind of goes a little bit neutral, there's going to be so many profit takers in here that this scenario will still paint because of the discounts that are now available for people taking profits off 41.5 short oil for that big top edge. Remember yesterday's classroom? The scenario painting, the 2-time framing, the 1-time framing. We told you it moved into 2-time framing again here. And 2-time framing was the narrative that we were painting for you. Again, guys, this is not me saying, look at how clever I am. It's me trying to teach you something. That developing scenarios and painting out these scenarios allows you to understand why price does certain things at certain times. Why does price drop into 8 o'clock? Why does price drop back into 2 o'clock? What do you do about that information? Why did we mark off the London auction squeeze on gold? The London auction sell, on gold. Because that's what we should be doing every day as traders. That's what we should be doing every day as traders, is marking off these narratives, finding these trades, finding these ideas. And if we don't, we're victims of this stuff, guys. We're victims. We don't want to be victims. We want to be guys that take responsibility for our own lives, our own trading. And that's all we can do, guys. That's all we can do. Anyway, welcome, and I'm going to grab some lunch. We've got the news coming out in 4 minutes, guys. 4 minutes for the news.